Welcome to another episode of Cheef and Sharp. It's your man Don Bucks. It's brought to you by Rap and Dough. You know, the home of money conversations. It's your first time tapping in. We talking about options trading on this here series. So make sure you hit the like, subscribe, and also the notification bell so you know when I'm going live. But this episode is entitled Blue Dream. Retest fail. Blue Dream, retest fail. If you was tapped in yesterday, if you was tapped in yesterday, you would know that the SPY was on a downtrend and it broke a support. So you know with regular price action, it has to retrace and test it. Boy, did it fail. And I was on the wrong side of that trade. So before we get into that, just a quick update. Y'all know I use my options trading money too. And hopefully y'all using y'all options trading profits to position yourselves for more residual income. Residuals, passive income. I mean, we're not trying to be trading when we're 70. I know I'm not. So we're taking these profits and we're buying income. That's dividends. That's position yourself with different ways to create residual income. And if y'all know my story, y'all know I use some of my options profits to buy a rental car, a car to rent. But how I'm doing it is I'm using Hire Car. So if y'all not familiar with Hire Car, I know everybody heard of Toro, but Hire Car is a platform that you can rent to gig workers, people that are driving for Uber or Lyft. So these people have to be gig workers in order to rent your car. They're not just people renting it for vacation or whatever. This is people that's actually working in your car. So that's the route I took. And today, finally got my first renter today. So I think it's been on the platform, 2 days maybe? So, and off top, he's screaming, yo, I'm going to be extending it too, because they have to get, initially, they have to get at least 3 days. No, 2 days. They have to get at least 2 days. So he was like, yeah, I'm going to extend it. So I'm like, all right, cool. So that's what you want. You want them to have it as long as possible. You know what I'm saying? Every day you're getting paid. So that's the update on that. But residual income is the goal, y'all. That's the goal. But the retest, let's get into it. The retest fail. Let's take a look at the SPY. So you know the trading time frame is 2 hour for me. So here we go. This was yesterday. This is where it closed yesterday. So it broke support. So I said it was going to retest it, and usually regular price action, here we go, like this one. It breaks and then it retests the area, like this one here. It broke support and retested it before it kept going down. So this one broke, and instead of it retesting and stopping here, it kept going. It kept going. So the thing is, on the later time frame, we look at the daily first. So on the daily time frame, we have let's make the screen bigger. All right, on the MACD, we have a new low going on here. So I'm thinking this is going to keep going. But this was for this move, clearly. And we have to pay attention to that. When we see a new low in the MACD, on a specific on a specific time frame. That move will be for that signal in the MACD would be for that move only. And then, you got to look for your next signal. So this one right here, when it broke this support here and retested, that's when that momentum divergence was created. This is the initial move. So if you positioned here for the puts, you would have been Gucci, because the next day, this is what happened. It came down here. And then the next day it came down even further. But of course, you would have took profit here first. But yeah, so this was the initial signal when you seen the MACD form this momentum divergence, new low with a retest of a support level that was broken. This is where you would have took the puts. See, me, I tried this one. Now, it's not a significantly new low, but I'm going with the trend. So I was positioning on this pullback, and you can't see it. So let's go down to the 2 hour. So you can't see it there either. So you got to go to the relatable, which is the half an hour. All right, so boom. Is this it? Yeah. Went through, retrace, and I'm thinking, okay, this is going down. It did go down. But like I just said, that signal was for that move. And it happened. It's not like it didn't happen. New low, momentum divergence, retest of the support, and then the next day, well, the next move was down. It worked. Either you were in it, positioned for that signal, or not. If you wasn't, that's a whole nother story. Don't try to jump in after the fact. Right? But me, I had, a set stop. Like, okay, if it goes past a certain level, I'm getting out. So it started going against me. Let's see, where did it start going against me? Where's the third? Where's the second? Oh yeah. I be having the days mixed up because I don't be looking at the calendar like that. I need to. I just be looking at what I be having to do that day, not necessarily what day it is. So all right, this is this morning. Here it go. So yeah, it did this. So instead of testing here and going down, it went up above the support, the resistance it was, but now it's support, and it just kept going like this. So this is where I got out at. Actually, I got out at right here. because I gave it some room. I was like, all right, this is it. It went past here. It's going. So I got out. So I took a nice L today. Nice L, because I'm thinking it was going to go the way the market's going to do what it's going to do sometimes. You're not going to win them all. And I got a good winning streak so far. Y'all been paying attention. So key is don't over leverage, because I over leverage. I didn't over leverage. I overexposed. So I lost. I lost a nice amount of money today out of that account, but we're still in the positive. We're still in the positive, but we're gonna get it back on the next trade. So that's the key. You don't want to over leverage or overexpose. because the overexposure could lead to over leveraging. Over leveraging is basically putting up more than you can emotionally stand to lose. That's over leveraging. Overexposing is, being within your emotional threshold, but still putting too much up to risk anyway. That's overexposure. Excuse me. So this is what we see going forward on the daily. So tomorrow on the daily, I see, let's make this chart bigger. Now, this MACD, it is ticking up. It's not a significantly new high. I like to see a significant new high on the MACD, but it's not, because look, that's the daily. Y'all know the older time frame tends to hold more weight than the shorter time frame. So the weekly shows downwards momentum. So basically, this green bar did not move that MACD. It did not change the fact that it's downwards momentum, even though we have a green bar, right? That's the momentum divergence. Downwards momentum with the green bar, like, right? Red flag. That's the divergence that we're talking about. So basically, what this is saying is this green bar is just short. It's going to be short-lived. There's going to be more weakness. Until there's more strength here, it's going to go down. It's going to test this level and go back down. So maybe it'll dance around in this range, but it's not going up at this moment. Right? It might dance in this range, 170 and 370 and 360. It might do that. Right? But remember what we said, after extremes, when stuff comes outside of the Bollinger Band, things that result from that is like what they call it, complex consolidation. So look at this. Where's a big, let me see a big climax cell outside of the Bollinger Bands. Look at this. Outside of the Bollinger Bands, once it finally snaps back, look how weird this is. All right. So that's what happens after these extremes that come outside of the Bollinger Bands. These Bollinger Bands represent extremes. So it's definitely going to bounce outside of here. But look how complex the bounce was. Like instead of it bouncing and showing strength immediately, it took a couple bars. And then boom. Like after this one, look at this big extreme outside the bars, Bollinger Bands, shall I say. And then the result, look, it bounced, but it's erratic. You see what I'm saying? So you want to be mindful of these outside of the Bollinger Bands, trying to position in the pullback, because the pullback can be janky. And it seems like that's what's going on with the SPY. Like it's erratic because it'll come out outside of the bands, and then when it snaps back in, it doesn't, the price action is not predictable. So these are not desirable trading environments. So if you decide to trade in these, you can practice in these, but you'll notice what I'm saying, that they're not desirable. It's crazy. So let's go back to the daily, because we're in the daily. But just for overall perspective, to give us some bias as to what's going on in the lower time frames, the weekly is saying downwards momentum. Right. So I see this come. Yeah, it's going to test once. I think this is going to test 170 tomorrow. 169, 170 tomorrow before it comes back down. So let's go to the daily. So the daily, look at this MACD. So that green bar didn't really, it moved it, but not much because it's respecting what's going on in the weekly. It has to have way more strength than this green bar to move, to make this be noticeable. It's not noticeable yet. So it's not really conclusive. So somebody that wants to, that looks for things that are conclusive before they make decisions, this ain't it. It's not conclusive. So I say this is going to test 170 before it comes back down. So to wrap it up, remember you're keeping your eye on what the SPY is doing, because a lot of times out of 10, your stock is going to be doing something similar, unless you're playing something in opposition to the SPY, where the SPY is going down and yours will be going up, like this one. It's the one I was playing. So, yeah. Yeah. So that's the play. That's what's going on. SPY should be testing 369, 370 tomorrow before it goes back down. That's what I believe. We're in this range here, as y'all can see. We've been in this range for the past week. So we'll see whether it's going to continue to break down and go to 352 or break this 370 and go to what's this, 378-ish. Yep, that's what we see. It's Cheef and Chart. Make sure y'all hit the notification bell. Hit the subscribe button if you haven't already. If you want to learn how to swing trade like this, the course is, the course is over. It was a weekend sale, but it's still in there. It's still available, regular price, but in the description. So, with that being said, always remember, it's no competition.